Hi, and thank you for joining us today for our silver conference. After being up 50% in 2020, silver was one of the few commodities down in the year 2021. So we wanted to put together a conference with industry experts to find out where the silver price is going in 2022 and give you some ideas on where to invest in this sector in the coming year. Our first industry expert is Mike DiRienzo. Mike is the executive director of the Silver Institute, and Mike will provide an overview of the global silver market and where the price is going. Our company presenters start with Forbes Gemmell, the VP of Corporate Development at Discovery Silver. Discovery Silver is a silver developer in Mexico. Discovery recently released a PEA on its Cordero project, and we will go through the details of that PEA with Forbes. Dan Dickson is the CEO of Endeavour Silver. Endeavour has 3 producing mines in Mexico and produced 4.8 million ounces of silver and 42,000 ounces of gold in 2021. Endeavour recently acquired a project called Pitarrilla, and Dan will provide an overview of this new asset and how it fits into its current portfolio. Charlie Gordon is the head of investor relations at Hochschild Mining. Hochschild has 3 producing mines and produced 12.2 million ounces of silver and 221,000 ounces of gold in 2021. Hochschild recently acquired Amarillo Gold for $135 million, and Charlie will provide the reasoning behind the acquisition and how it fits into its current portfolio of assets. Michael Steinman is the CEO of Pan American Silver. Pan American is one of the world's largest silver producers and produced 19 million ounces of silver and 579,000 ounces of gold in 2021. Pan American has 10 mines in 6 countries, and Michael will highlight the largest of those mines, including the Escobal mine in Guatemala. If you have any questions for any of our presenting companies, you can write the question in the open chat on the right-hand side of your screen, or you can send us an email to info@bloorstreetcapital.com. I hope you enjoy the conference. Hi, Mike. Thanks for joining us today. How are things in Washington?
Things are great, Jimmy. Thank you so much. It's always a pleasure to see you again.
Likewise. Michael, we have a lot to discuss in a short period of time. And before we jump into where the silver price is going in the coming year, why don't we start off with a brief overview of the Silver Institute, starting with when it was formed and what is its mandate?
Sure. So last year, we actually celebrated our 50th anniversary of the Silver Institute. It was formed in 1971, and it was initially thought to be an informational viewpoint for all the members. So they would put reports out on various small segments of the market. Back then, photography was the main driver of silver demand, so there was a lot of talk about silver's use in photography. And over the years, it's sort of developed into a market-based association, where we are looking at all aspects of silver demand, of the silver market, I should say, including demand and supply, price, trade, and so forth. And what we're looking to do now is just give a greater picture and bring greater awareness and understanding of silver to a broader audience across the country, across the world.
And Mike, maybe you can just tell us who your members are.
Sure. So our member companies comprise pretty much the breadth of the silver mining industry. We have mining companies, we have refiners, we have end users of silver-based products. We also have transporters of silver. And we have roughly a little over 30, and that includes supporters of our major body of work, which is, of course, the World Silver Survey.
Right. And I want to touch on that too, because that's a great report. But why don't you just tell us about some of the other reports that the Silver Institute publishes throughout the year?
Oh, absolutely. So we do a bi-monthly silver news with anyone can register for at our website, info@silverinstitute.org. That's a bi-monthly publication, and that includes little snippets and little anecdotes, stories on various aspects of silver. So it could be on medical applications, it could be on demand, it could be on basically anything. I mean, every day scientists are looking to incorporate silver into a wide range of products, and we report on those developments. We also, of course, as I mentioned, the World Silver Survey. We do what we started in 2020. They're called market trend reports, and they're unique, shorter reports on various aspects of silver supply, silver demand, focusing on solar, for example, 5G, silver's use in electronics. This year we'll be doing one on the Indian investment market. We'll be doing one on millennials and silver jewelry. And in March, we're looking to publish one on silver and brazing and alloys.
As you mentioned, the World Silver Survey, it's considered the Bible within the industry. Very extensive, very detailed report. Why don't you just give us a brief overview of that report?
Sure. So this publication began in 1990, and it's continued every year. And to echo your statement about it being the Bible of the silver industry, it truly is. It covers 7 main areas of the silver market, mostly looking back at the previous year. But in recent years, we've included some forward thinking into the current year. So we will put this out on April 20th of this year in New York City, and we will post it to our website. It will be accompanied by a press release, and we look forward to it. That's produced, by the way, on our behalf by Metals Focus, the independent London-based precious metals consultancy.
Mike, that's a great overview of the Silver Institute. Let's move on now and look at the sector from a top-down approach, beginning with the top producing countries. The top silver producer in the world is Mexico, producing approximately 23% of world production, followed by Peru and China. And I was very surprised to see China on that list.
Yeah, it's interesting on China. You know, 20 years ago, last year, we made our first foray into China, and that happened when they essentially allowed for its individuals within that country to own gold and silver. So for over 20 years, we've had a close relationship with the main players in the Chinese silver market. And what that has afforded us is not only access to what they're doing, but it also provides us the privilege of co-hosting an annual silver conference, which literally has become the largest international silver-specific conference in the world. It's held annually in China in various locations, and you know, the Chinese don't have one deposit, but they have a series of smaller mines across the country. And you know, they're number 3. They've been number 3 for quite some time, and we're glad that, you know, to see that market flourish.
And do you have a conference planned for 2022?
Yeah, we simply serve as a co-host, and this is usually held later in the year. But we are involved in inviting Western speakers, content development, publicity, and so forth. So it's typically in November or December, where it has been the last few years. Now, we've been doing it remotely, of course. The Chinese have strict COVID protocols, so I have not actually been since 2019. So hopefully at the end of this year, we'll be able to attend in person.
So that's a great overview of the actual producing countries. Let's move on to the companies now. If we look at the top 5 silver miners in the world, number 1 is Fresnillo. They produce approximately 50 million ounces of silver annually. But the other 4 that make up the top 5 producers are either gold or base metal producers. Mm-hmm. What % of silver production comes from mines that actually produce pure silver? And what % comes from base metal companies?
We estimate it to be roughly 30%. You know, it could be 29% one year, 30% or 31%. So on average, it's about 30% of global mined silver production comes from what's known as a primary silver mine.
And silver was up 50% in 2020. It had a great year. By 2022, it had a little bit of price weakness. It was down approximately 10%. Did the fact that copper was trading at extremely high levels through 2021 result in more silver coming to the market from these base metal companies?
I mean, that could have been that could have been one of the reasons. I mean, look at silver started the year off. It reached $30 as a result of the effort from the silver squeeze movement, which was quite successful for a few days. But what it personally did, we think here at the Institute, is that it's galvanized a whole new generation of silver investors, and they are quite active today. And for that, we are fortunate. We know they're going to be in the market. They're true believers, and we support their efforts to acquire more physical silver. Now, when you look at the silver price on an annual average, the price actually built on its 2020 gains, and it rose some 24% to $25.03. And that follows a 27% increase from the previous year. And this really reflected healthy investor inflows into silver on the back of then supportive macroeconomic conditions, most notably the persistence of exceptionally low interest rates and concerned about uncontrolled fiscal expansion. So not to mention the fact that inflation was a key topic last year. So last year's annual average silver price was the highest average price since 2012's $31.15.
Yeah, I'm glad that you brought up the silver squeeze. I can't believe that was almost a year ago.
It's basically a year ago as we speak. You know, that happened near the end of January and continued into early February. It was, like I said, while they didn't achieve their ultimate goal, what they did do is they brought greater awareness to silver across the world, and they continue to be significant players in the market today.
Mike, what will drive the price going forward? Will it be more industrial or will it be investment demand?
I think it'll be a combination of both. I think many investors look at the appeal of silver as an investment, but they also keep a key eye on silver's growing use in industrial demand.
And I guess one of the things I should have mentioned also, that overall demand for silver in 2020 was 896 million ounces. Industrial is the largest component of that demand at 486 million ounces. So the industrial component is very important.
It truly is. And it's not only just the industrial, it's everything on the demand side. So, you know, when we look back at 2021 last year, when we put out our report on April, you'll see that every key area of silver demand rose in 2021. And that includes a record for industrial demand. And that's unique in the fact that there are ongoing supply chain challenges. So global demand is set to reach over 1 billion ounces last year when our report comes out. We talked a little bit about it in November when we produced our annual silver interim report on the market. And this recovery in silver demand will see it achieve a new high of over 524 million ounces last year. And we think that photovoltaic demand will have risen by 13% last year, and that'll be a new high. And that just underscores silver's role in the new green economy. And when you look at the investment side of it, physical investment, it rose by some 32% last year. Basically 64 million ounces higher than it was in 2020. The strength was driven by the United States and India primarily, and Indian demand has sort of roared back into the market last year after a rather disappointing 2020. So we look forward to this year and building on those gains of 2021.
So you just touched on demand. Now, what about production? In 2020, total silver production was 976 million ounces, of which mine production was the biggest contributor, 784 million ounces. Can you give us some idea of what production will be in 2021?
We think it will have increased at the end of the day by about 6% to about 829 million ounces in terms of silver mined production. It's largely a result of mines that were not able to operate in 2020 due to pandemic restrictions. then operating last year at full capacity. You know, after these enforced stoppages of the previous year. We think countries with the most heavily impacted last year with respect to mine supply will be Peru, Mexico, and Bolivia. Will have the largest increases. So that's where we are right there.
Mike, one of the components that you discussed when we were discussing in silver demand was electrification and the importance of this in driving the price higher. Maybe you can just touch on that.
Sure. I mean, listen, it's a key component of the overall demand matrix for silver. It has the highest, silver has the highest electrical conductivity of all metals, and it's a component in virtually all electronic devices, and that includes those that we use on a daily basis. But that's not just vital today. It's going to continue to grow as it's related to global connectivity. And these technical advancements will rely on the white metal, essentially, to make these products work. We're talking everything from an iPhone, talking to your garage opener. We're talking from being able to look while at a grocery store into your refrigerator to see what you're missing and what you need. I mean, quite frankly, the world is being connected greater and greater almost every single day. And we continue to believe that this will expand, as do most people. And we think as a result, silver is used in the electronics and electrical sector will have risen from about 224 million ounces in 2020 to about 246 million ounces by year 2025. Now that represents a 10% increase over that time frame, and it really goes to the heart of the issue. Is it's just such an integral part of these applications across the globe. 5G communications, the joining of once unintelligent goods to a greater ecosystem, including the Internet of Things. So silver is at the heart of these new technologies, and we think that it will continue to establish reliable and instantaneous connections to all these devices, and not to mention its use in automobiles. Its use in automobiles has grown significantly over the last several years. And that has to do primarily with the fact that more consumers are demanding the safety features and other features in the car, even at the lower level price point vehicles. And I'm talking about ICE combustion engines. Now, when we start looking at electric vehicles, and mandates across the globe to produce more electric vehicles, the silver used in the connectivity of those vehicles will continue to grow. And we think that by 2025, there could be somewhere of 90 million ounces of silver in automobiles, and that essentially will rival its use in photovoltaics.
So Mike, the demand side looks very robust, both on the industrial side and also the investment side. So I'm going to put you on the spot now. Where's the price going in 2022? And are we going to have another year similar to 2020?
Well, look at, we've started the year off pretty well. There seems to be growing interest in silver investment based on how the year ended in 2021. I've seen reports of higher silver prices, lower silver prices, but we're going to stick with our consultants at Metals Focus. They're calling for an average price of this year of $25.75. I personally think that will be a little bit higher, but that's the figure they gave us. Hopefully we'll have an update in April when we release the World Silver Survey. But the bottom line is that the silver market is healthy. People are interested in the white metal, and we're going to do the best we can to get as much information about all components of the silver market to as many people as possible this year.
Mike, that's a great overview of both the Silver Institute and also the supply and demand side of silver. And I want to thank you for making the time today. And to all of our viewers, I would encourage you to check out the Silver Institute website. There's a wealth of information on there that's free, anything and everything you want to know about silver. Mike, once again, thank you.
Thank you, Jimmy. I really appreciate the opportunity, and I look forward to seeing you soon. Thank you.
Hi, Forbes. Thank you very much for joining us today. How are things in Toronto?
Yeah, good, Jimmy, and good to be here. And look, aside from lockdown in the middle of winter, things couldn't be better.
Good to hear. Discovery Silver ended the year on a strong note with the release of the PEA on your flagship property, Cordero, which proves out the size and the scalability of this asset. Before we do a deep dive on the PEA, why don't we just begin with a brief overview of Discovery Silver for those viewers who might not be familiar with the company?
Yeah, sure. So we have 100% ownership of Cordero, and Cordero is one of the world's largest undeveloped silver deposits. So the total resource is over 1 billion ounces of silver equivalent. The project is located in the Chihuahua state, so that's northern Mexico, so a very sort of active and mining friendly part of the world. And the project is at what you would call a pre-development stage. So as you said, we just put out our PEA. We'll be delivering our pre-feasibility study later this year. And look, as far as Discovery Silver is concerned, we have a market cap around 600 million, cash balance 70 odd million, and we trade on the TSX Venture Exchange, ticker DSB, and the OTCQX, ticker DSBSF.
So you mentioned you're in Mexico, you're in the state of Chihuahua, and even though Mexico is pro-mining, a pro-mining country, what's very important is the state that you operate in. Give us a little bit more detail on this. How receptive are they to mining? How receptive are they to Discovery Silver?
Yeah, no, you're absolutely right. Not all states in Mexico are equal, but certainly in Chihuahua, mining is one of the pillars of the economy. I think there's more than 100 producing mines in the state. And what's important as a result of that is it makes it much smoother from a permitting point of view, as well as accessing skilled labor. And for additional context of where our project is, we're in the southern part of the state. We're actually just north of a town called Parral. Parral, there was a silver discovery there in the 1600s. The town was built around that. There was a mine there for more than 3 centuries. So certainly mining is in the lifeblood of that area. And what's also nice is it's not just Chihuahua, but more northern Mexico is you have this rolling topography that's not heavily vegetated. So from an open pit mining point of view, it couldn't be more ideal.
And let's spend a little more time on the permitting. You said the state is good for getting things done and permitting, but give us some more details on that.
Yeah, sure. Look, what's nice with Mexico, the permitting, it's a clear and transparent process. There's 3 main permits you need. One's the environmental impact assessment. 2 is a risk assessment, and 3 is a change of land use. Typically, it takes around 12 to 18 months to get all 3 of those permits. So when you compare that timeline to certain parts of US and Canada, where permitting can drag on for a number of years, that's quite an expedited timeline.
That's a great overview of Discovery Silver. Let's move on now. I want to spend some more time focusing in on your preliminary economic assessment that came out in late 2021. And why don't we just begin with a good top-down view of it? What's the net present value, the internal rate of return, and also the years to pay back?
Sure. So we'll start with that base case where we had a $22 per ounce silver price. So the NPV at that base case, 1.2 billion. That's US dollars. IRR of 38%, payback around 2 years. And then we ran an upside case scenario where we used the 90th percentile of metal prices over the last year. So silver at that percentile was $27.50. So we've traded above that obviously recently. At that price, the NPV goes to close to 2 billion. IRR is now 55% and the payback is now 1.4 years. So certainly very attractive headline numbers coming out of that study.
And I'm sorry, Forbes, what did you say the CapEx was?
So the initial CapEx to get the mine built was 370 million. And that will ultimately deliver a mine that will be one of the top 5 primary silver mines globally. And it's a relatively modest upfront capital amount for 2 main reasons. One, the project is already supported by excellent infrastructure. We have a highway down one side of the property, a power line down the other, so that gives us a huge head start. And secondly, we took a staged approach in terms of how we build out the mine. By that I mean we built the initial processing plant to have a capacity of around 7 million tons processing per annum. We then expand that in year 5 with the cash flows from the mine to 14 million tons per annum. So by taking that stage approach, we can reduce that initial investment and reduce our upfunding requirements, and ultimately resulting in a capex that's less than 400 million.
And Forbes, when you say it will ultimately be within the top 5 producing mines in the world, or the top 5 silver mines in the world, is that in terms of annual production?
Yeah, and look, for context, first 10 years of the mine life, we're producing around 30 million ounces silver equivalent. So if you look at both, well, Core, First Majestic, and Hecla, they're producing around 30 million ounces silver equivalent right now, but across 4 mines for each of those companies. So obviously all our 30 million ounces is coming from the one project. So that just gives you an indication for the scale of production that the Cordero will be delivering.
As you mentioned, Cordero is going to be an open pit mine, and this is very rare in the silver space. Can you just talk to the relevance of this?
Yeah, sure. So yeah, look, most silver deposits are vein deposits, so mined via underground methods. Cordero is a very big, broad, disseminated silver deposit. The mineralization is close to surface, so it's certainly ideal for open pit mining. And I suppose there's 3 key advantages I'd highlight of open pit mining versus underground. First of all, from a complexity point of view and a sort of operating risk point of view, there's a lot more complexity involved with underground mining. You're sort of space constrained. So in terms of the underground infrastructure, things like communications, dewatering, it's much more challenging trying to sort of fit that infrastructure in. And of course, you have to have proper ventilation being underground. That's not an issue in open pit mining. The second is open pit mining is much more cost efficient. So given there are no space constraints, you can use much bigger trucks, much bigger shovels. So that obviously translates to economies of scale and much more sort of efficiency for mining. And then lastly, open pit mining is much less capital intensive. So for an underground mine, you've always got to be developing your main haulage ramps, your main shafts, to be chasing the ore body. That's obviously very capital intensive. You don't have to deal with that within an open pit mine.
So let's look at the costs associated with open pit mining. What will your all-in sustaining cost be at Cordero?
So coming out of the PEA, the life of mine average cost was $12.35 per ounce. So a very low number, and driven sort of 2 main reasons. One, I mentioned the open pit mining. In addition to being an open pit, we have a very low strip ratio. It's around 2 to 1 over the life of the mine. So we don't have to move a lot of waste to get to the ore body. So that helps reduce our mining costs. And then the second other reason for that low cost number is that metallurgy is excellent. So we don't, we did a very detailed program last year, and as far as metallurgical test work, and confirmed that it's very straightforward to liberate the metal from the ore. And so that ultimately translates to a low processing cost. So those two factors combined result in an AISC less than $12.50 per ounce. And yeah, when you look at silver right now trading $22, $23 per ounce, that's obviously going to translate to a very profitable mining operation.
Forbes, you mentioned that your all-in sustaining costs will be $12.50 an ounce. How would that compare to an underground operation?
So look, every mine's different, and underground is more expensive to mine the ore, but typically higher grade. So on a dollar per ounce basis, really depends on that grade. But I think for context, that $12.35 per ounce average life of mine would place us in the bottom half of the industry cost curve.
Forbes, Discovery Silver is a simple story to tell, as you've already stated. It's going to be an open pit mine with a low strip ratio and low capital intensity, and therefore the path to production is very clear. Why don't you just take us through the timeline associated with this path to production? You've already come out with your PEA. What's next?
Yeah, sure. And look, I might just sort of take a step back on the PEA. There's a lot of loosey-goosey PEAs out there. We feel our study was very technically robust. And I can say that because it was based on a very detailed metallurgical test program. And then also there was a lot of drilling that went into the resource estimate. And in fact, 99% of the tons in the mine plan in the PEA are in the measured and indicated category. Normally, it's very rare to see such a high percentage. So that gives us a great springboard as we go from the PEA now to delivering the PFS, which we plan for the second half of this year. And then following that, delivery of a feasibility study in the second half of 2023. So at that point in time, we should be in a position to make a construction decision. We're also going to be initiating our permitting process the first half of this year. As I said, that's usually a 12 to 18 month process. So that should coincide well with that construction decision toward the end of 2023. And look, in the background, we're also remaining very committed to everything on the ESG side of things. And this is something that's often overlooked, especially in earlier stage companies. We just delivered our inaugural ESG report towards the end of last year. And certainly there's going to be a lot of focus and energy on environment, social, and governance over the next couple of years as we work towards that construction decision as well.
Let's move on to your balance sheet now. How much cash do you have, and how are you going to allocate that in the coming year?
Okay, so we have a current balance around 70 million. We have actually about $40 million worth of warrants that are going to be potentially coming in this year. They're in the money right now. Eric Sprott, who's actually our biggest shareholder and a very big supporter, he owns 25% of the company. He holds a majority of those warrants, so that they're in good hands. So, look, certainly a lot of firepower there. And in terms of where we're going to spend that money this year, we're still working through our budget, but I'd imagine it'll be pretty similar to last year, where we spent around 25 to 30 million. And that allocation, probably a bit more than half of that will go towards the pre-feasibility study. So we're going to be doing some infill drilling within the deposit and then advancing further work on metallurgy, hydrogeology, and geotechnical work. And then the other part of that allocation, which would be a little bit less than half, would be what you would call growth, targeting growth. And so that growing the resource. So we know that there's some obvious target areas from our work, especially to the northeast of the deposit. There's some extra potential to go to the resource. And also in our land package, we have 5 early stage targets, which we haven't drill tested yet. We've been doing a lot of field work to work those up to basically get drilling on those this year. So we feel it's a nice, healthy balance between de-risking the project and trying to expand the multiple that project garners in the market, as well as not losing our focus on growth to continue to sort of grow value through the drill bit as well.
I know Eric Sprott is quite bullish on the silver sector, but I'm surprised he owns so much of Discovery Silver. Is he an active shareholder? Is he on the phone to you all the time asking what's going on?
He's relatively hands-off. And yeah, you're right. For context, I think we're his second biggest position in the silver space behind First Majestic. So, but given the size of the position, look, he's hands-off. He's been, I think, comforted by the work we've done to date. And obviously there's an ongoing dialogue there. We obviously want to make sure we're sort of communicating with him on a regular basis and keeping him up to speed what's going on. But beyond that, I think he's been quite content to sort of sit back and let us continue to advance the project the way we have to date.
Forbes, as we wrap up, what can investors expect in terms of news flow from Discovery Silver in the coming weeks and months?
So it's going to be a busy year. So there's going to be ongoing drill results, and that'll be a combination of the infill drilling within the sort of P8 pit, as well as resource growth drilling, as well as some of these property-wide targets. There'll be ongoing releases around sort of metallurgical test work we've been doing. And then ultimately that will culminate in the very big catalyst at the end of the year, which will be the delivery of the pre-feasibility study. We're still working out the timeline for that. At this stage, we're looking at the third or fourth quarter of 2022.
Forbes, thank you for sharing the Discovery Silver story with us today. To all of the viewers, if you have any further questions for Forbes and the team at Discovery Silver, please send us an email to info@bloorstreetcapital.com. Or if you would like some research on Discovery Silver, send us an email and we'll send that along. Once again, Forbes, thank you.
Thanks for your time, Jimmy. Appreciate it.
Hi, Dan. Thank you very much for joining us today. How are things in Vancouver?
Things are great, James. Thanks for having me.
Dan, Endeavour Silver's had a great 2021 with improved production at your flagship mine, Guanaceví, and the release of your feasibility study at your growth project, Terronera. And you recently announced a new acquisition in Mexico called Padaria. But before we dive into these various assets, why don't we just start with a brief overview of Endeavour Silver for those viewers who might not be familiar with the company?
Yeah, I mean, Endeavour Silver's now been around for about 15 years. Brad Cook was our founder, and he moved from the CEO role to the executive chairman role this year, actually. So I took over May 2021 in this position. I was the CFO for 14 years, so I've been around for quite a while. And we're based out of Vancouver, headquartered here, but our operations are in Mexico. We have the Guanaceví asset, as you touched on, is kind of our flagship asset we built the company off of. The Bolañitos asset, a bit more south in the state of Guanajuato, also in Mexico. And then we have some development assets, the Terronera project. We have the Parral project in the state of Chihuahua. And ultimately, yeah, we just picked up Pizzeria from SSR Mining, who are rationalizing their portfolio. So we've got a great base in Mexico. We're also based in Nevada, USA. We've got an exploration property there, and we've also got an exploration properties 4 or 5 actually down in Chile as well. So we're trying to grow, and our focus is try to get to become a senior silver producer over the next decade.
Dan, that's a great overview. And you mentioned that you have 2 producing silver mines. And in the interest of time, I just want to focus on the larger of the two, and that's Guanaceví. And consolidated silver production was 4.8 million ounces on the year, 42,000 ounces of gold, or 8.3 million ounces of silver equivalent. And this was primarily driven by this mine. And I just want to touch on what exactly you and your team did to drive this performance this year.
Yeah, I mean, this year's performance really dates back to historical years. I mean, like I say, we've been at Guanaceví now 15 years, never had more than a 2-year reserve life. Ultimately, it's kind of like pearls on a necklace. You go down that, and one of the keys for any underground mine is mine development and making sure we're staying ahead of it. And we have enough stope opens to meet production profiles. In 2017, 2018, the lower silver prices, your margins contract, your cash flow contracts, and ultimately you end up starving a little bit of the mine to try to manage your cash flow as best you can, but it impacts your longer term production. And I think we got caught with that in 2017, 2018, and made a lot of changes in 2019, started refocusing on mine development. We bought a new fleet. So all the work to 2020 and 2021 where we've beat guidance at Guanaceví stems from that. And the second part to it is in 2019 of October, we signed an agreement with Frisco, one of the largest miners in Mexico, family conglomerate owned by actually Carlos Slim, to acquire some land around that, made a discovery and brought that discovery into production in 2020 and 2021. And the grades have been phenomenal and ultimately led to our beating guidance for 2020 and 2021.
Well, that's interesting. I didn't realize Carlos Slim was involved in the mining industry. Does he actually own any mines, or he just owns property?
No, yeah, Frisco's Mexican based. They have 5, 6 different operations across diversified, whether it's gold or copper. He's got a nice portfolio for sure.
You always want to have a little bit of gold and silver in your portfolio.
Absolutely. In the world that we live in today and with what governments do, I think it's a good spot to be. And obviously it's been throughout times a store of wealth, and gold's been a phenomenal thing. And for us, we produce about 40% of our revenue comes from gold, 60% comes from silver. So we are a silver producer, and what we're seeing in the silver space and what's happening from an industrial aspect coupled with monetary aspects of silver, we're excited where we're at, and we're excited about the properties we have coming to be able to take advantage of that.
So I just want to ask you a couple more questions on Guanaceví before we move on. But you also had higher grades this year, and your all-in sustaining costs were also lower. Can you just touch on those two elements, please?
Yeah, I mean, they go hand in hand. The grade ties to this El Curso concession and bringing that online in 2020. We do a reserve and resource report, but we've even improved from that reserves and resources, ultimately what we're actually mining. You always tend to be a little bit conservative when you're estimating, and I think we were conservative, and that's showing up in our production profile. And with higher grades, on a per ton basis, we're producing more ounces of silver. We've been at Guanaceví for 15 years. We know the cost structure, and when we put out guidance, ultimately what's driven our all-in sustaining costs down is the higher grade on a per ton basis. So we are starting to see some costs increase, definitely from a supply chain standpoint in 2021. The inflation that we're seeing kind of in North America and around the world, that's percolated its way into the mining space as well. So we have seen costs push up, but luckily our production profile was higher than what we planned and ultimately drove our all-in sustaining costs on a per ounce basis down.
And can we expect the same in 2022, higher production, higher grades?
Yeah, we're going to come out with guidance in the coming weeks. Ultimately, we have our reserves and our resources. I expect the grades at Guanaceví to be similar to what we had in 2021. So that would mean a similar production profile. The plant capacity is about 1,200, 1,250 tons per day, and we basically run that this year and in the past year at 2021. We expect to do the same in 2022.
Dan, let's move on to your development project, Terronera, which when it's in full production, it's going to almost double the size of your silver output. The big news in 2021 was release of the feasibility study. Why don't you take us through that, and why don't we just look at some of the primary features like net present value, internal rate of return, and also
Sure.
payback?
Yeah, no, I mean, Terronera is a game changer for our company, and ultimately completely puts us on a different profile than what we have with Guanaceví and Bolañitos. Those assets, we've been there 15 years and 14 years respectively. They're great assets. They're steady state. They are higher cost assets just because of the length of time we're there, where we are in the deposits, et cetera, et cetera. For us, Terronera is an organic discovery we made. It's a land package we picked up in 2010 and ultimately fully owned it in 2013. made a discovery. We've got about 86 million ounces, or sorry, 78 million ounces defined as M&I and ultimately in our mine plan at Terronera. We put that feasibility study out. It's a very robust project. At today's prices, you're looking at about 30% IRR. Net present values just shy of $300 million with a CapEx of about 175 million. So very bite-sized. We're working on a debt package today, going through due diligence with banks and ultimately use the cash that we have on our balance sheet and some debt, which we currently have zero debt on our balance sheet, to be able to bring Terronera into production. And as you say, it will double our production. But the great thing about Terronera is ultimately its cost profile. On a cash cost basis, the cash cost is about 59 cents per ounce of silver. And that's on our base case. Using prices today, you're looking at negative cash costs. All-in sustaining costs, you're effectively using all the gold. We'll pay for that silver. We're thinking about $1.50 all-in sustaining costs, again, on a base case. If you look at today's prices, gold is that byproduct. Cash costs, all-in sustaining cash costs are negative. So there's not many projects in the silver space that have come around, and this completely changes us. Takes us from a tighter margin to basically cuts our cost profile in half, because cash costs are zero and all-in sustaining costs are near zero. And then, as you say, doubles our production. Terronera, first 4 years, will do about 7.5 million silver equivalent ounces per year, and over the 12-year life that we've defined, it'll average 6.5 million ounces silver equivalent per year.
And Dan, I just want to get a better understanding of the cost, the all-in sustaining cost. Why is it, or why will it be so much lower at Terronera than it will be at your other producing mines?
Fresh ore bodies, but there's a number of characteristics of why. Grade, gold is a byproduct, so the gold that we produce is coming off those costs. But even from a cost per ton standpoint, which is the main driver of our costs, those are going to be lower on a per ton standpoint because of how shallow the deposit is, how thick the deposit is. So basically at Bolañitos and even at Guanaceví, Bolañitos we run about 2 to 3 meters in thickness. Guanaceví we run about 3 to 4 meters in thickness. At Terronera, the deposit averages 5.5 meters to 6 meters in thickness. It's very shallow. There is a lot of opportunity at Terronera to depth and along strike, so we're excited about that. But just on that 12-year mine life, the thickness, the shallowness, the grades is what's going to drive that lower cost per ounce compared to our other operations.
And Dan, let's talk about the timeline associated with construction and eventually production.
Yeah, I would say most of our permits are in place. There's always permits that you have to get after you get certain permits and as the construction period goes. We're very close on that. There's minor extensions with the new feasibility study put out. We've got amendments just pushing out some boundaries where we want to run a mill pad, where we're putting a staging area, basic things. If we want to get construction started today, we can, and we've started certain things. The construction period is 2 years. We'll get formal construction decision from our board ultimately when we have the financing package in place. The plan is to have that done here by the end of Q1 2022. And with that financing package, we can hit the ground running. But we have already ordered mobile fleet. Some of it's arrived, some orders arriving in March. We have a ball mill already sitting near site. There's a number of things that we're doing to make sure that we meet a 2-year timeline from a construction period. If we can meet that 2-year timeline and be on time, it'll help us be on budget for that project.
And I'm sorry, remind me again what the CapEx is associated with this project?
Yeah, right now in our feasibility study, the initial CapEx is 175 million. That was spent basically linear through the 2-year construction process. I think early on, there's a lot of earthworks needs to be done, about 6 months worth of earthworks. That's going to impact how that cash goes out. But with long lead items and making it, it's generally, like I say, a linear path of 175 million over the 2 years.
Dan, that was a great overview. Let's move on now. Your latest news is the acquisition of a very large undeveloped silver project in Mexico called Pitarrilla for $70 million, and this was acquired from SSR. Why don't you just give us a brief overview of this asset and also what was the rationale for acquiring it?
Yeah, I mean, Pitarrilla, since the original discovery by Silver Standard, which turned into SSR Mining, they'd staked it and made the discovery in 2002. Ultimately, it's one of the largest undeveloped silver deposits in the world. I mean, the discovery really is fantastic. And they advanced that all the way to 2009 where they put an underground pre-feasibility study on it. And then in 2009, the silver world changed. Silver ran from 2010 to 2012 up to $50. They reconceptualized what Pitarrilla was. They saw it for all the halo effects, the oxides, the sulfides, and actually came out with the super pit. Still considered a great project, but ultimately silver came back since 2012 when they put out that feasibility study and kind of languished here in the teens and in low 20s. And ultimately their feasibility study was done at $25 silver. Fast forward another couple of years, Alistair and SSR, Silver Standard, merged, new management team, they're rationalizing their portfolio, an opportunity for us. They're focused on gold, they're focused on other areas. We're focused on silver. The Pitarrilla deposit's got 525 million ounces defined under M&I. I mean, if you compare that to what we have at Endeavour, we're close to 200 million ounces silver equivalent. So that's our gold and our silver taken into account. This is 525 million ounces of silver defined as a resource at Pitarrilla, plus lead, plus zinc, which is about half the deposit. So we're excited to be able to acquire it. We think it was a very fair purchase price on both sides. I think both sides have been very happy with the deal, very positive from our standpoint, from our shareholders. I think it's been positive from theirs. They are going to be a 5% shareholder. They're taking some shares in the deal, but we're excited. And we've got a lot of exploration to do. We're going to prove up the resource. So we've got some to make it a current resource under Canadian guidelines under 43-101. But we expect to have that done in 2022, and then we'll put an economic study on it for 2023.
So your development team's going to be very busy going between Terronera and also Pitarrilla. How are they going to balance that time?
Yeah, they are going to be busy, and that's a phenomenal problem to have. And ultimately, Terronera and our development team, that's our focus for the next 2 years. They will focus on developing that. Our exploration team will focus on Pitarrilla, especially for 2022. When we get into the economic studies, we can move some of our engineers over from Terronera to Pitarrilla, but we'll also use external consultants primarily on a feasibility study or a pre-feasibility study, depending on where we're at and what stage we're at with Pitarrilla. So it shouldn't take any focus away from Terronera, but ultimately with Pitarrilla, we've got to let the geology and figure out what our resource is and look at those numbers. Then we'll look at different scales of production. And ultimately, Endeavour's an underground miner. We're not open pit. The way we see Pitarrilla coming out will probably be an underground mine, but that's yet to be determined. We'll figure out the resource, put it in the hands of the engineers, see what the studies say, and then go forward from that.
Dan, as you mentioned, the asset was acquired from SSR. What will you and your team do differently than what they did?
Yeah, to be honest, I think they've done a great job defining that resource. I mean, because it is dated, it's 2012, we will make it a current resource. For them, it just became a rationalization of their portfolio, their focus on gold. They made a pivot. There's a reason why they used to be called Silver Standard. They changed their name to SSR. They picked up a lot of gold assets, and there's only a handful of us primary silver producers out there. A lot of the silver producers moved into gold over the last 10 years, and we've stayed on the silver path, partly because of our discovery of Terronera, partly because we believe in that metal over the next couple decades. So it's not that we're going to do anything different. It's just something that makes sense in our portfolio compared to their portfolio, and we think we can advance it, and we're going to reconceptualize some of the things the previous management team at SSR Mining did, and ultimately we think it's going to work out very well for our shareholders.
That's a great overview. Thank you. You recently came out with your Q4 production numbers and full year numbers for 2021.
Yeah.
And you made mention of the fact that you sold 1.4 million ounces of silver, 8,700 ounces of gold, but you also held back some silver and some gold. Is this something you do often, and what was the rationale for doing this?
We do it time to time. I mean, it's just based on what we're seeing in the marketplace, what's happening in the silver price or gold price at any given time. And we've held back silver for most of 2021. Actually, we held back some in Q2, more in Q3, and kind of kept that same level here at the end of the year. And ultimately, it's the believing in the silver price. We have a very healthy balance sheet at this point in time. We don't have any long-term debt. We have over $100 million in cash at September 30th. We had this bullion that's worth about $30 million. Working capital was over $150 million. So we had the the benefit of our balance sheet to be able to make these decisions when we can and cannot sell our metal. Now, with the acquisition of Pitarrilla and the build of Terronera coming, we're going to sell that metal, but we do expect to sell it in a higher price environment than what we finished the year at. And that's just our belief in silver over the short term and ultimately over the long term. But it's just a management strategy over a short period of time. We don't like to sell into a falling market and ultimately like to see a base and it come back. The ebbs and flows of the metals market is what we're trying to take advantage of.
Dan, as we wrap up, you made mention of the fact that there's very few silver companies now, and you made mention of the fact that SSR used to be Silver Standard. I totally forgot about that company, and now they're focused on gold. But why do you think that is? Why are so few companies focused on silver, and more of these, what used to be silver companies, are focusing more on gold?
Yeah, a couple factors I think go into it. One's the scarcity of silver projects and primary silver projects. If you look at silver production in the world, we produce somewhere about 800 million ounces, peaked at 1 billion ounces per year. Only 30% of that production comes from a primary silver mine. To get scale and once you get to a certain size of silver, it's how do you replace that production and maintain the profile and growth of a company. And I mean, we're all taught through years of experience and some of us through school that growth is a good thing and you always want to provide growth. That means that you're moving forward, and sometimes you get stuck if you can't find a silver asset to replace ounces you previously produced. You start looking at gold assets, and I mean, gold and silver are nice fits together. There's monetary aspects to it and often found in the same deposit. So I think mostly it has to do with what's the next evolution of the company, how do you continue to grow, and sometimes it comes down to patience and finding that right project in the right jurisdiction, and other times it's management just wants to pivot and they see an opportunity. And opportunities sometimes in geology, you're looking for silver and you end up with a different metal, or gold and you end up with a different metal, and that might change that path of those companies. But I think it really comes down to the scarcity of silver deposits in the world.
Dan, that's a great overview. As we wrap up, what can investors expect in terms of news flow from Endeavour Silver in the coming weeks and months?
Yeah, I mean, a lot's happening obviously with this acquisition. We've got lots happening in the company. We do have our other exploration assets. We have Parral. We put out drill results there in December. We'll have more drilling here in 2022 and expect to have results coming out at Guanaceví, Bolañitos, and Parral when it comes to exploration. Again, at Terronera, I think the key drivers though coming up is the financing package for Terronera and the formal construction decision before the quarter's out. We will put out guidance for 2022. We generally do that at the end of January. And then it's normal operations, and we'll continue to look from an M&A standpoint what we can put into our portfolio that makes sense to add value for our shareholders.
Dan, thank you very much for that update on Endeavour Silver. And to all of our viewers, if you have any questions for Dan and his team, please send us an email to info@bloorstreetcapital.com and we'll make sure you get an answer to your questions. Or if you would like some research on Endeavour Silver, send us an email and we'll send it along. Once again, Dan, thank you.
Thanks, James.
Hi, Charlie. Thank you very much for joining us today. How are things in London?
Pretty cold, Jimmy, but otherwise all great here.
Charlie, Hochschild Mining has had a long and rich history within the mining sector, but it's a company a lot of people have not heard much about or they're not familiar with it. So why don't we begin with just a brief overview of the company and its various operations and where they're at?
Sure. Well, Hochschild as a company has been around for 100 years, actually, well over 100 years. I think it's now nearly 110 years. And we've been mining for well over 50 years as well. And in fact, actually, our original mine, which is called Arcata, only closed about 2 or 3 years ago. So we're pretty knowledgeable on Peru and Argentina. And we currently have 3 mines. 2 of them are 100% owned in Peru. and they are Immaculada, which is the flagship mine, and Palancata. Immaculada has been going since 2015, so it's a relatively new deposit, new mine. And then Palancata has been going since 2007. As well as that, we have 51% ownership of San Jose, which is in Santa Cruz region in Argentina. That's owned 49% of that is owned by McEwen Mining of Canada. At the moment, we've 31 million ounce was the target for 2021, and we've just had our Q4 results today. So that's roughly what we produce. At the moment, we're a little bit more gold than silver, all these mines, all three of them, are narrow-veined underground epithermal deposits. So we like to say at Hochschild that we do invest in districts. And I just mentioned Arcata, the old mine, which went on for well over 50 years. And we do expect that Immaculada, Palancata, San Jose will go on for many, many more years as we find more and more veins.
As you mentioned, you just recently released your Q4 numbers and also your production numbers, and your flagship mine, Immaculada, which is in Peru. The full year production numbers were 6.2 million ounces of silver, 165,000 ounces of gold. And as you said, it's a little more gold focused, but can you just give us a highlight of this mine and just tell us about its production and also the costs associated with it?
Yeah, sure. Immaculada is operating at the moment pretty much quite near to where it's been the peak of its operation in terms of production. As I said, it started in 15, and it does about 3,850 tons per day through the plant. So it's not a very big plant, and these aren't very big mines. It's about, as you said, it's about 70 to 80% gold. So pretty high grade, operating at about 5 or 6 grams a ton of gold equivalent. So it's pretty high grade, low tonnage type of mine. Its peak production probably a year or two ago was about 20. We as a company, we tend to talk in silver equivalent. That's really just a sort of historical thing that we just convert our gold into silver to give you one number. It's really a hangover from when we used to be much more of a silver company. But I think investors and analysts like having a one number that they can compare with. So Immaculada is the lion's share of our production. As I said at the beginning, we do 31 million ounces in 2021, and Immaculada was about 19 million of that in terms of silver equivalent. And by the way, the ratio we were using last year was 86 times. That has changed a little bit, as you know, this year with silver doing so well, but in 2021. But it's our flagship mine. It is probably 75 to 80% of our free cash flow. That's absolutely the key mine when it comes to understanding Hochschild. Immaculada is crucial.
And a big part of that story is also the exploration side. And you recently made a new discovery at Angela North. Maybe you can just expand on that.
Absolutely. Let me just give you a little bit of history there. So, as I said, it started operations in 2015 with one main vein called the Angela vein, about a 5 to 6 meter wide vein, lovely wide vein, nice and easy to mine, high grade as well. And we had about 5 or 6 years we knew about ahead of us in reserves, and we've mined those. But obviously, most years since then we will be doing brownfield exploration to find all the other veins that we know in the area. So between 2018 and 2020, we found a whole new set of veins to the south of the Angela vein. Angela vein goes west, sort of west to east. And we found a whole new load of veins to the south. Last year, most of those veins were slightly lower grade, lots of volume, but slightly lower grade than what we've been mining at Angela. But last year, we actually found a whole new area to the north, and what we call effectively an extension of the Angela vein to the north or northeast, called Angela North. And of course, we'll probably take another year or so to bring them into the mine plan. We've only obviously just found them. But that means that hopefully the average reserve grade of the deposit will go up. You always, with all these sorts of mines, you will get fluctuations over the years in terms of production. It always depends on the types of veins you're finding. I mean, as I said at the beginning, we do invest in districts, and you keep finding more. And we've got another big program this year to look in the whole land package, and it's a very big land package.
And why don't we move on to your second mine in Peru, Palancata, and just give us a brief overview of that operation.
Sure. Palancata started in 2007 and at one point was producing, quite a large amount, 12, 13 million ounces of silver equivalent. In contrast to Immaculada, actually, this is more of a silver mine. It's only 30 kilometers to the north of Immaculada in South Peru. But it's actually mostly dominated by silver. And I should say, as a company, we don't choose between silver and gold. We're very happy mining both, and they both appear in these sorts of mines anyway. Palancata, as I said, is a bit more of a silver mine. It's been going for 13 or 14 years. At the moment, it's got quite a short mine life. It's got a couple of years left. And in fact, actually, we've been hedging production to do with Palancata. And we've hedged some for this year, I think about 4 million ounces. Next year in 23, we've got about 3.3 million ounces hedged at around that sort of $25. And I think this year's production is hedged slightly higher to more like $27. And that should ensure production for the next couple of years while we look to find more resources. The brownfield team is doing a big job there at trying to find resources, and that will hopefully keep the Palancata mine going for the next 2 or 3 years. We also have some really interesting targets on a more regional basis, which we hope will be the future for that plant. Palancata has a plant about 15 to 20 kilometers away called Selene. Now, Selene was actually once upon a time a mine, and we built the plant there. That plant is the one, there's no longer a mine there, but the plant services or processes the ore from Palancata. And the idea is, in the long term, we hope to be able to find a whole new area that can provide feed for the Selene plant. So it's like a short-term strategy, finances near the current mine, long-term strategy, find new districts to feed the plant.
And let's touch on your third mine, which is San Jose. That's based in Argentina. You already mentioned you own 51%. McEwen Mining owns 49%. Just provide us a brief overview of this operation.
Yes, San Jose actually started in the same year as in 2007 as Palancata. So Hochschild built 2 mines at exactly the same time, which I think is pretty impressive. San Jose is an ultra high grade mine. It operates or has operated in recent past at about 13 grams a ton of gold equivalent. So it's very, very high grade, right down in the desert in southern Argentina in the Santa Cruz region. It has produced between about, should we say, 12 to 15 million ounces per annum over the last few years. Obviously been quite a tough period over the last couple of years, as it has for all of us with COVID. There have been restrictions in the country, stoppages in 2020, but it's actually had a pretty good year, producing, I think, around 12.5 million ounces. And we should get a reasonably similar amount for next year or for 2022. So normal operations there at the moment.
So you own 51%, McEwen Mining owns 49%. Why not just buy the balance?
Well, I think it's a really good question. I think as a company at the moment, we like San Jose a lot. Would we as a company commit, huge amounts of new capital to Argentina? Probably not at the moment. It's something we've looked at and we would certainly consider at some point. But I think for the time being, we're happy with our investment at the moment. We think that there's a fantastic land package there, huge joint venture land package owned by us and McEwen. So many hectares to explore. So we think there's still great potential there. I mean, obviously everything has a price, doesn't it? But I think for the time being, we're very happy with the ownership structure as it is.
So that's a great overview of your operating mines, Charlie. I want to ask you about a few other things now.
Yeah, sure.
You've had a lot of news here in the last couple of quarters. You recently announced the acquisition of Amarillo Gold, which is in Brazil. You also announced earn-in option agreement with Skeena's Skip Gold project in British Columbia. and you also announced some news on Volcan, which is an operation in Chile. So why don't we just begin with the Amarillo Gold, and what was the rationale for acquiring this company?
Yeah, sure. This is really exciting. It is a new area for us, or new country for us, Brazil, next door to Peru. It's going to be more of an open pit mine than an underground one, but we've operated open pits before. We've really said for many years that we're looking for precious metal acquisitions in the Americas, and that can be obviously South America, which is to some extent our backyard, but we've operated mines in Mexico. We've done a lot of business in Canada and the US, and Brazil it's certainly been a target for us. We think Amarillo is really interesting. It's going to give us a mine that's going to average in the first 4 years about 100,000 ounces per annum of gold. Its capex is not too huge, so it's about 200 million to build the mine. It's relatively near-term production, so it should be into production in about 2 to 2.5 years. So it's pretty much shovel ready. The economics look encouraging, but crucially for us, and it's always important to us, that we think there's some good geological upside here. So we think we'll carry on and do some more drilling, as well as updating the numbers and starting construction. So for us, we think it's a fairly low risk in a very, very mining friendly area, the Goiás state in Brazil. There's lots of other operators around. And crucially, we like the fact that there's really good community support. And in fact, if any of you if you were able to listen to our Q4 call today, you'll notice that our CEO and some of the team were actually in Brazil visiting site, and I think they're encouraged by the local government and local community support for this project. So we're really excited by it. I think we announced today that we've got a budget here, 120 million project capex this year. So it's an ambitious budget this year to really get, to make real headway with this project. So we're excited, and clearly it's great. It's 2 or 3 years, and we've got some good growth in the pipeline now.
And the deal hasn't closed yet. When do you expect it to close?
I think it'll close, it's due Q1 2022, so right now, but I would say sometime in March, I would think.
So let's move on to your earn-in agreement with Skeena. I was surprised when I read about this, that because you're stepping outside of your backyard, most of your operations are down in South America. Now you're going to be operating in British Columbia. Provide us some background on this and why you decided to go into British Columbia.
Yeah, sure. We've had quite a bit of exposure and experience in Canada before. A lot of our people have. We appointed a VP of North America last year, Tom Elliott, who's ex-Kinross. And I think the idea behind this is that, as I said, we've had experience in Canada before. We used to have a reasonably large percentage of lakeshore gold, so we know it well and we know the people well. We like the jurisdiction, of course, and we think there's huge potential there. Over a number of years, our greenfield head has done a few option deals on various deposits that we liked. We liked Snip a lot. It was obviously a mine in the 1990s, ultra high grade mine, and Skeena, we thought, had done a great job, and they had 2 assets, or have 2 assets, which is obviously SK Creek and Snip, and we liked Snip a lot. And we like the fact this is low risk. They did some exploration. We were able to take a look at it over a number of years to look at the drill results and assess the project. And then when it came up for the option to be either exercised or discarded, we decided it was, it was a very promising project. So we're looking forward to, we've optioned it in Q3, Q4 last year. Really looking forward to getting more drilling done on the deposit. It's obviously slightly earlier stage at the moment than, for example, Amarillo or the Posse Gold project in Brazil. But we're excited about the potential drill results, and maybe in the next 2-3 years we can see this construction start there. But for us, it's a nice low risk entry into an excellent jurisdiction.
So you recently had some news on another asset you own called Volcan, that's in Chile. Provide us with some background on that, please.
Yeah, we've just recently appointed a new CEO, Greg McCunn, of Volcan. Volcan's a project we've had in our books for some time. Clearly, in 5-6 years ago with gold prices quite low. We didn't move this project forward. It's a very, very large project in the Maricunga down in Chile. It's got 9 million ounces of gold resources, so huge deposit. And we've appointed Greg to come in and really just look at the options and see what we can do in terms of looking at all the data we have, maybe coming up with different options for development and see what we can do. As exactly as you pointed out, we've been doing lots of things with our portfolio in terms of options, in terms of acquisitions, and I think this is a logical next step for other large assets that we have in our portfolio. So we're excited, and hopefully in the next few months it'll become more clear to the market which route we intend for Vulcan.
So late in 2021, Hochschild also announced some other news. They spun out a separate company. Why don't you provide us with some background on that?
Yeah, we bought, this is Aclara Resources Incorporated, which is now listed on the Toronto Stock Exchange. We bought that in October 2019. It was at the time called Biolantanidos. We bought it from a private Chilean private equity group. It's down near Concepcion in Chile. It's a really interesting project. It's an ionic clay project, which is exactly the sort of rare earths resource that the Chinese have and have built their monopoly in rare earths on. So it's ultra environmentally friendly. It's a very nice project that over the next year or so there'll be a feasibility study on. We did feel, though, however, it's a different set of investors, different capital requirements. I think most people expect to invest in Hochschild for precious metals. So we thought it was the right time to demerge it, give it to shareholders. We have retained a 20% stake because we think it's an extremely exciting business. But it's raised its capital in Toronto, almost 100 million. And these are exciting times for it. And I think with a different set of investors, they can move it forward possibly much quicker than they could have under the Hochschild umbrella, where obviously it would have been competing for capital with Amarillo, with SNP and other projects. So we're really happy to be concentrating on the precious metals and let a separate independent management team and board develop and move Aclara Resources on down the development pipeline.
You've had a busy few months.
It's been an amazing few months. The third and fourth quarter of last year, so many deals, and it's I think this year there's a huge amount for us to do, and I think very, very exciting times for our company.
And Charlie, just another question with regard to the silver price. A lot of your competitors will hold back silver production and also gold, or they'll maintain that in their inventory because they're looking for higher prices. Does Hochschild Mining ever do that? No, we don't tend to, as a company, speculate. We do tend to sell on spot. The exception to that is we have hedged some production to do with Palancata, as I mentioned, just simply because it's potentially in its final couple of years. We wanted to make sure that it could profitably produce, even though its costs are relatively high at the moment. And as I mentioned, just to give our brownfield time a little bit more time, we want to make sure that each mine of ours pays for itself, is not burning cash. And so we've put those hedges in place just to protect that mine while we look for further ounces in the region, and as I said, close to the mine as well. But generally, we're not a company who speculates on silver prices. We like silver a lot, we like gold a lot, and we're pretty bullish about the price for both of them. Charlie, Hochschild Mining went public in 2006 and you listed on the London Stock Exchange at that time. Just recently, you did get a listing on the US OTC market, but why did you not get a listing, given your size, get a listing on the New York Stock Exchange or the Toronto Stock Exchange? Well, I think it's something we would clearly be interested in, obviously as a South American business at the moment, and potentially across the Americas. In the future, we understand that the US and Canadian investors, understand a lot about those sorts of business and have there's a large peer group versus Europe. But I think from our point of view, we would only ever consider a listing
in those sorts of, in both those two markets, if there was a liquidity event, if we were raising finance or we were doing some sort of deal or M&A, then I think we would consider it. But at the moment, we're very happy with London. We've been here for what, 15, 16 years. We know the analysts very well. We've got very good coverage. We like Toronto. We like New York a lot, and we do go there quite a bit. And we have quite a large percentage of our shareholder base in the US and Canada. But we're quite comfortable at the moment. But let's see in the future. You never know if there's a big deal to be had or some finance that we need to raise, then potentially that could happen.
Charlie, as we wrap up, what can investors expect in terms of news flow from Hochschild Mining in the coming months?
Well, I think the most important thing is we've got results next month on February the 23rd. You'll see an updated reserve and resource statement, and therefore you'll be able to see how we've done on brownfield. Brownfield is such an important part of our strategy, increasing the life of mine at all three of our mines. So I think you'll see an update there. You'll get the 2021 financials, and then moving into the rest of the year, I think everyone will be looking to see how we do in terms of the Posse Gold project in Brazil, Amarillo Gold's project, and how we go in terms of starting construction there, and the same with Snip. I think people will be looking for drill results there. How's that deposit looking? What sort of numbers are we going to get? What sort of economics? So I think there's a lot that's going to be going on. I mean, as I said, we've got a 34 million brownfield budget for this year. We're going to spend 120 million on Amarillo. We've got a decent 10 to 11 million greenfield budget. We're spending approximately 9 million at Snip. So these are exciting times, and I'm hoping through the rest of the year there'll be some fairly regular news flow on how we're doing on all those parts of our strategy.
Well, you got a lot going on, and thank you very much for sharing your story with us today. And to all of the viewers, if you have any further questions for Charlie and his team, send us an email to info@bloorstreetcapital.com, or if you would like some research on Hochschild Mining, send us an email and we'll send that along. Charlie, once again, thank you.
Brilliant. Thank you very much, Jimmy.
Hi, Michael. Thank you very much for joining us today. How are things in Vancouver?
Pretty good, and thanks for having me, James.
Pan American Silver is one of the largest silver producers in the world, having produced 19 million ounces of silver in 2021 and over 500,000 ounces of gold from 9 different mines. But before we examine your various operations, Michael, in more detail, why don't we begin with a brief overview of Pan American Silver?
Sure, pleasure. We are, as you said, we're the second largest silver producer in the world. Production, of course, impacted the last 2 years by COVID, so that's why we were just below 20 million ounces. Normally, we are quite a bit above that number. So big impacts in Latin America, where most of our mines are located. We are where the silver is. Silver is not just evenly distributed through the world, so a lot of the silver is in the Cordillera, somewhere from southern Chile or Argentina all the way up to Alaska. And that's where we are located with our operations. 27, 28 years of operating in Latin America. The biggest silver producer in the world is Mexico, followed by Peru. Those are our two biggest jurisdictions as well, but we have operations as well in Argentina and in Bolivia, and then we have two gold mines in Timmins in Ontario as well. So quite a very diverse portfolio, geographically diverse, and then as I said, obviously a lot of silver production, but also a sizable gold production. You mentioned it was quite over 500,000 ounces. Normally, we do somewhere between 500,000 to 600,000 ounces of gold from our production, mostly, as I said, in Ontario, and then from two large gold operations in Peru as well. So a very interesting combination, but as I said, we are located where the silver is, and that's really a geological reason and not just, you know, I look at many places on the planet, obviously, and you can go and you can mine gold in many places, but you're quite a bit more restricted if you look at silver.
And Mike, what is the revenue breakdown between silver and gold?
Well, there's a big change. Of course, about 3 years ago, we closed the Tahoe transaction. And as we all know, that the silver mine that was involved in that transaction, Escobal in Guatemala, which is one of the largest already built silver mines in the world, is on care and maintenance, still awaiting the consultation process. So while that mine is still waiting to come back in production, Escobal, when it went into care and maintenance on the Tahoe, produced just about 20 million ounces by itself. So while that is waiting, all our gold production is obviously producing. So that kind of changed a little bit the mix here. So we are probably looking right now, depending on the gold and silver price ratio, of course, probably 30 to 35% silver revenue. And then probably around 60%, 55 to 60% gold. And then the rest is base metals. Again, this is really, reason is the geology. You don't find silver by itself. It comes together with gold or with base metal. That's the mix we have. But this is how I see really a shorter term issue. When you look at our reserve distribution, it's actually about 50 to 55% silver and probably about 30 to 35% gold and the rest base metal. So that's really where it goes in the future again. But meanwhile, while we have Escobal on care and maintenance, yes, there is obviously more revenue from gold coming than from silver. But you know, I'm very happy with when you look at the prices. Silver actually underperformed quite a bit over the last 2 years gold, so it was not a bad business to be and selling a bit more gold. And with that, investing and financing our future silver growth. We probably have some time later on to talk about La Colorada mine in Mexico, where we made a very big polymetallic discovery below our silver mine. So again, a project that will come in the future. This one still needs to be built, but a project that is out there that will increase our silver exposure again. So just a transitory thing, really, to have a bit more gold right now and moving into much more silver again in the future.
I definitely want to touch on La Colorada, but before we do that, you mentioned something that I find quite interesting, and that is silver has underperformed gold in the last 2 years. And before we move on, why do you think that is?
Well, if you look at the silver price, it's quite a complicated situation, as silver has a component for investors very important like gold, but it also has a very important industrial use. And as you know, I will call it the future green use or use in clean energy production and electrification of the world. It is playing a very, very important role because you need silver to make solar panels. You need silver in every electric circuit, in every motherboard, in your phones, in your screens, in your computers, in your car, of course. And electric cars now, they need more silver than combustion cars because there's more computers and more electric controls in it. You need to build a charging network. We're building 5G networks, et cetera, et cetera. So the largest part of silver uses on the industrial side goes at the moment into solar panels and into electronics, and it's over 50% of the silver use that is used on the industrial side. So that's one price driver, if you want to call it like that. And it really depends on growth perspective in the world, GDP growth, etc. And right now, of course, when we look forward into the electrification, how many solar panels will be built and installed, how many electric cars, etc., etc. All uses that are going to increase in the future, I have no doubt about that. So silver will play a very, very important role on the industrial side. But then the other part, and actually a stronger price driver, is really driven by the investors that buy silver bullion for the same reason they buy gold bullion, right? As a hedge for inflation, or whatever reason they might see fit to make that investment in silver bullion. We have seen quite a lot of volatility over the last few weeks. in that sense by buying and selling. And I think it's really until we see some clarity here where the Fed is going with interest rates. But again, I see a very strong role that silver will play here in the future. But definitely the last couple of years, it's at a good price. I mean, I like where the silver price sits at, somewhere north of $20. Pan American is a very profitable mining company at those prices. So by all means, these are great prices. But yes, they were a bit behind gold, and that's what silver does very, very often. I mean, you have seen it about, when was it, just about a year ago, a bit less than a year ago, where silver was underperforming gold. I think we have seen silver gold ratios go all the way to over 120. I think the year before, and then when it's changing very quickly. And then silver picked up, and I think we are now probably around 70-75 at a gold-silver ratio, so much more normal relationship between the two metals.
Great insights, thank you. So let's move on. As you mentioned, you have 9 producing mines, but in the interest of time, I just want to touch on 3 of your larger mines, beginning with your flagship mine, La Colorado. Maybe you can just give us a brief overview of that mine.
Yeah, La Colorado is a very interesting mine. It has been a silver mine since the mid-90s or late 90s for Pan American. Was first quite a small operation. Then over the years we expanded production continuously. We reached about 2,000 ton a day. La Colorado normally mining very high grade, narrow silver veins. We have reserves right now of over 100 million ounces just on that mine. If you look at actually our total reserve sits over 529 million ounces, so a very large reserve. But a large part of that, over 100 million ounces, is located in those high-grade veins at La Colorado. So that's probably around another 12 years of production. We have similar resources, so maybe another 10 years. So very long mine life. But when we started just about 3 years ago, drilling very deep holes below those veins, we actually started to find what we call a skarn, so kind of a source for those veins. And we start finding these very wide ore bodies, while higher up in the veins we are mining, width of, let's call it 1.5 to 3 meter wide. We now drill wide intercept up to 270 meters. So completely different ball game, very, very wide mineralization, deep seated, lower grade, of course, than the veins, although we actually published a few holes in November which have actually very similar or higher grades than the veins. But there's a bit more base metals. It comes with a lot of zinc. There's some lead in it and quite a bit of copper as well. So very interesting. The resource that we came out a year ago for that, we call it the skarn, that big wide ore body, over 100 million tons, completely different size than what we have mining before, containing over 142 million ounces of silver. That's in addition to the reserve and resource I mentioned before, to the veins. A lot more drilling necessary. We announced that in November we'll drill about 60,000 meters. I think at the moment we're drilling probably about 10 to 12,000 meters a month at La Colorado. So that's moving very quickly. I would see, if everything goes well, going mid-year, we should have a resource update on that big skarn, and then move forward into kind of a PA or later pre-feasibility to see how we mine that very, very large ore body. Of course, it will need at one point a different plant. It's so big, the tonnage will increase substantially, and it will run for a very long time. If you look at big base metal silver deposits of that tonnage, you know that you're looking at multi-generational mines, something really that really builds big mining companies. Those are the assets that not running just for a decade, but run for a very long time. So very, very excited that we have and that we made that discovery. Even more excited that it's below one of our best mines and we don't have to go out and purchase the project. It's 100% ours. So great way forward here with a big project for Pan American.
And I know it's still early days, but if you look at a few years, when do you think you can bring those ounces into production?
Yeah, we did not make a plan really that detailed. It will be a few years to build it. We actually start sinking a shaft, just started right now for ventilation purpose, that we can use for the current veins, and then just the top of the skarn as well. We actually start running a dual ramp this year as well. So you will see some project capital spending over the next few years. Yeah, we need to wait until the drilling is done and we come out with the updated resource and the PEA before I can tell you when we start mining these ounces. But yeah, very, very exciting project.
And I want to move on and ask you about another one of your silver mines, which is located in Peru, and that's called Huaron. And it produced 3.5 million ounces in 2021. Just provide us with a brief overview of this mine, please.
Yes, again, actually a bit wider structures, but it's a vein deposit, polymetallic as well. So we produce concentrate there as well, copper, lead, and zinc, and then the silver reports to copper and lead concentrate that are being exported. The mine is in production for a long time. Pan American purchased the mine, I think, just in about the year 2000, and it has been in production before. So it's one of these really, really large, typical, large vein deposits of central Peru, with veins that just continue going deep, deep down. There are a few deposits which are not with Pan Am, but we see vein extensions of 2,000 meters and more. We are right now with Huaron only, I think we're down about 600, 700 meters. So there's still a lot of room. If they continue, we actually developing levels deeper down. We find all those veins again. There are many structures covering very large areas. So these are mines that go for a long time. So that's definitely valid for Huaron. Large reserve, good silver production, good polymetallic silver production. So very happy to have that deposit, and I'm sure it will be an important cornerstone asset for Pan American for a long time as well.
And I want to ask you about one gold mine, Shahuindo, which is an open pit mine in Peru, relatively new, but just provide us with a brief overview of this operation.
Sure. Shahuindo, as you said, a big open pit in northern Peru, came to us through the acquisition of Tahoe Resources, and actually just started 3 years ago operations. Maybe half a year before. It was not even at full production when we purchased it, and we increased production to current levels. A great asset, a lot of exploration potential there as well. We have reserves right now for probably another 9 years or so. It's a run-of-mine heap leach, so completely different than our silver mines where we produce concentrate, so that produces gold. It has a little bit of silver in it, and actually gets quite high grade in silver below the pit, so that will be an interesting exploration target for us in the future. But at the moment, yeah, we enjoy to have Shahuindo with us and producing, having strong gold production from that asset, as I said, for quite a large number of years more to come.
And Michael, we can't have a discussion on Pan American without talking about Escobal, which is a silver mine in Guatemala. When in full production, it'll be one of the world's largest primary silver mines, but operations have been suspended because of the government. Maybe you can just touch on that and give us an update as how things are progressing within Guatemala.
Right, so operations have been put on care and maintenance under Tahoe Resources. As I said, the mine was in production for about 3 years, produced around 20 million ounces a year, so very strong silver producer. It got into a court-mandated consultation process that has to be finalized. It hasn't been finalized earlier, so that's the reason why the courts under Tahoe put that in care and maintenance. We continue with that process, obviously. That consultation process between an indigenous group and the Ministry of Mines, so it's not run by Pan American, so I don't have really control over the timing, but it's moving forward. We're having meetings, consultation and pre-consultation meetings, where we are a party to it, and of course indigenous group and other stakeholders, and then run by the Ministry of Mines. So this is moving forward. Of course, there was some delay because of COVID, and many meetings over the last 2 years had to be postponed, but the meeting schedule has been taken on again, and we continue with the meeting. So looking really forward to this broad and wide consultation with the indigenous groups and stakeholders around the project. It's a very interesting mine for sure. It's one of these very few mines in the world, right, that have not only high grade but also large resources. You find maybe some very high grade narrow veins in Mexico or in some places, but very small tonnage. Or you find some maybe big tonnage, but very, very low grade. But finding big tonnage at high grade is something that doesn't happen very often in silver deposits. So a very unique deposit for sure.
And I really want to focus on the fact that company-wide Pan American produced 19 million ounces in 2021. And as you already said, if and when this comes back into production, it's going to be producing 20 million ounces. So you effectively double your silver production. So there's huge optionality associated with this one asset.
Yeah, definitely. I mean, that was the reason why we did the transaction and purchased the assets from Tower Resources. I always saw it as a great opportunity, and it will take its time. It's worthwhile to wait for it for sure, and for sure look forward to add that optionality into our production profile. But as I said, at the moment, it's a care and maintenance, and we just have we have to work through that process.
So that's a great overview of your various operations, Michael. Let's move on. I want to touch on your balance sheet now. You have a very strong balance sheet, very little in the way of debt. You have a large credit facility of $500 million. How much cash do you have, and how will you allocate it in the coming year?
Yeah, so as of course, the Q4 numbers will only come out in February. So as of Q3, it was about I think $324 million of cash and short-term investment. You mentioned we have an undrawn credit facility of $500 million, so over $800 million of liquidity available to us. It was always very important to us, and it's very important to me to have a very strong balance sheet. I think it's absolutely important for a company in the mining space, and especially if you mine precious metals where you see a lot of volatility, that you have a strong balance sheet. It just allows you to do always the right thing. So it allows you to focus on exploration, corporate development, etc. when prices are low, which is very important, which is the right time, obviously, to do all that. It allows you to maintain all your development capital while prices are low, and we know that this is always going to cycle. So it's very important to have the cash available to always do your development, etc. So to stay ahead in the game and not have to cut that back when prices are low. But it also, of course, gives the opportunity on the business development side to do something to deploy that cash, and then it helps you when you make a big discovery or you have a great project like the discovery, the skarn I described at La Colorada. So to have a strong balance sheet available to actually invest in this high return projects. And last not least, and really important to me, we don't have to go to the shareholders to ask for additional capital. The last time we had to do that is actually all the way back to early 2009. So I can hardly remember it. So and that's very important. You can obviously go back and do lots of companies do share buybacks when they have more money, etc., etc. I just prefer not to issue those shares in the first place, and keep a strong balance sheet, have projects and mines that generate a lot of free cash flow. And that's really the way to run a stable long-term business through all the ups and downs in the silver and gold market.
In the next few minutes, Michael, I just want to ask you a few general questions about Pan American. As you mentioned, you have 9 producing mines. Would you ever consider selling off some of your smaller mines to focus on your more larger, more profitable mines?
Well, look, I'm always looking at optimizing our portfolio, and that means looking at acquisitions, looking at divestitures. We sold off a few smaller projects over the last few years. So I'm always focused on that. Our business development group, of course, always looking into that with the idea to consolidate really the highest quality mines we can have, producing the highest quality and best return ounces that we can. So that doesn't always mean just the highest amount or highest number of ounces, but really producing the highest quality ounces we can. So we're always working on that. You know, sometimes that's easier to do than in other parts of the market. Sometimes you find great buyers that you know want to take it on, and they have different idea what they could do with the deposit. Sometimes it takes a bit longer, but no, we are always focused on that, and that's just part, I think, the normal part of building a stronger mining company.
And just a continuation of that, Pan American, as you mentioned, has 2 producing mines in Canada. Would you consider increasing your exposure in Canada or the US for that matter?
Absolutely, but it always depends on the quality, as I said, of the assets. You know, having additional geographical diversification is great. I love having, as I said, with 9 assets, that diversification is really a great thing. You know, if you have run only like 1 asset or 2, it's a big risk there. If something goes wrong in that asset, that you get into trouble as a company. So having diversification with assets, but also geographically, is very, very important. And having more assets in North America, by all means. But again, it really depends on the size. For us, it has to be sizable to move the needle for Pan American, and it has to be of high quality. So it could be, you know, silver, silver, gold, gold, silver with base metals. That doesn't really matter for me. It's really depending on the quality of the asset, on the return they deliver to Pan American.
So you don't have a preference for gold or silver. It's all about profitability and quality of the asset.
Well, as I said, of course, we are focused on silver. It's called Pan American Silver. But my point is that, as I said before, geologically, silver doesn't occur alone. So it's very hard just to find a silver asset. So you could choose between buying, you know, silver with gold, probably mostly in oxides, or you buy silver with base metals. And that doesn't really matter for me. It's really the quality, as I said, of the asset. If I go with the silver gold, or sometimes maybe a bit more gold silver or silver base metal deposit. But at the end of the day, of course, we're a silver company, and people, lots of people buy our shares because of the silver exposure, for sure.
And Michael, Pan American operates in 6 different countries. Navigating the politics in each of those countries must be very complex and time consuming. How do you and your team do it so effectively?
Well, most importantly, we are very decentralized. We don't try to run everything out of Vancouver. We have a small team in Vancouver, very accomplished team. We're working together probably over 15 years now. Most of the mines we build or expanded actually with the current team. So that's very important to me. Then we have a lot of experience in Latin America. I've worked and lived all my life, all my career in Latin America. We speak the language, and then we have very strong local teams. So, these are not expats; they are really local teams, and that's what we count on. So, very strong local leadership, decentralized structure, and really understanding the places we work in. And as I said, speaking the language, knowing the culture. Most of the management team worked and lived in Latin America as well. So that's really the combination for success, I think.
Mike, as we wrap up, what can investors expect in terms of news flow in the coming months from Pan American Silver?
Well, we're going to go through obviously to Q4. We showed the production, you mentioned it, but we have to wait for the financials. So the financials going to come through. We're going to come out with the outlook for 2022 as well. We actually hold back a little bit on that for a few weeks just to see how we go in Latin America through the Omicron wave here. 2021, 2022, as difficult as they have been as years, they have been very, very exciting actually for for Pan American. We paid back all our debt. You mentioned it. We actually increased 3 times our dividend. Last year by 43%. So and when you look at the dividend you get with Pan American, we actually returned about $550 million of dividends since 2010. There's a bit of earlier a few share buybacks in there, but mostly dividend payments. And as I said, we increased it during the pandemic 3 times. So very exciting, I think, for shareholders that as well. But at the end of the day, I think most shareholders buy Pan American shares for the exposure to silver and for the exposure to growth. So news flow that's going to come out on La Colorada, for example, as I said, this really exciting long-term project will be very important for us, and I think very important for our shareholders. We will have the update of our reserve and resources. Exploration is very important to us, always has been, and as I said, the La Colorada discovery there is a result of that. So our updated resource and reserve statement comes actually out in the middle of the year, not at the beginning of the year. So another important part to look at, and then for sure the updated resource as part of that for the skarn at La Colorada.
That's a great overview. I'm going to ask you one more question before I let you go, Michael. I'm going to put you on the spot. Gold is trading at or near its all-time high. When is silver going to take out its all-time high of $50 an ounce?
Yeah, people always ask me about the silver price, and of course, my job is really, to produce as much silver as we can at as low cost as possible. The silver price, wherever it is, I obviously don't have control over it, and I don't have a crystal ball neither. Where it's going to go. All I know, and as I said at the beginning, I see a lot of really exciting uses for silver, a lot of new uses, and they see this big change from early in my career where silver really was just used in photography, and now you have so many important uses for silver. And when you look forward where we want to bring our world, those uses will just increase and not decrease. It's just very clear to me that we're going to electrify the world, and we're going to need a lot of metals to do that. We need a lot of copper, of course, and other metals, battery metals, etc. But that's only possible with silver, because everything will be controlled by electronics and clean energy production. So we need a lot of silver for that. So if you look at that, I think there's a bright future ahead of us for silver. When does it going to happen? And it's going to pick up again against the gold. Maybe it could happen with some more investment demand next month. It can happen a bit later. I really don't know. But as I said, if you look a bit at the longer term for silver, I think it's a very, very exciting story to look at.
Great insights and a great overview of Pan American Silver. Thank you for sharing the story with us today. To all of the viewers, if you have any further questions for Michael or his team, send us an email to info@bloorstreetcapital.com and we will get you an answer to your questions. Once again, Michael, thank you.
Thank you very much. Have a good day.
Well, that concludes our silver conference, and I hope you found it informative. We have some amazing conferences coming up in the months ahead, so don't forget to subscribe to our channel, Bloor Street Capital, and hit that notification button to stay up to date. Once again, thank you for your support.